morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the financial results of two very well-known international brands which trade right here on our local Trinidad and Tobago Stock Exchange. We're speaking, of course, about Angostura Holdings Limited as well as Unilever Caribbean Limited. Now, both groups would have reported improved earnings for their respective six-month periods or half-year periods ended June 2025. Let's take a look at how each of those companies or groups would have performed and what investors might expect in the coming months ahead. Turning firstly to Unilever Caribbean Limited or UCL. Well, for that half-year period ended June 2025, the group would have reported an earnings per share figure of 96 cents, which was an 81% increase from the 53 cents per share recorded in that prior comparable period of 2024. Revenues were up about 13.6% from 120 million to just under 137 million, with gross profits improving 18.9% from 54.7 to 65.1 million. Ultimately, profit before taxes improving 67% from 21.7 to 36.4 million, and overall profits for the period after taxes, of course, increasing that 80.8% rather from 13.9 to 25.1 million. So certainly very good reading for UCL investors at this particular point of the fiscal year. Now, when you take a look at revenue trends for UCL, we can see that after a somewhat choppy period during those comparable half-year periods in 2021 to 2023, there has been some consistent improvement in revenue trends. In HY 2024, up 1%, and in the most recently concluded period of half-year 2025, up 13.6%. Take that with a slight pinch of salt. UCL did mention that some changes to the distribution model and liquidation of warehouse stock would have led to accelerated revenues or inflated revenues in that first fiscal period of 2025, first half of 2025. We do expect to see some degree of moderation as we move forward into subsequent periods based on that particular insight. Now, when we take a look at operating margins and profitability margins for UCL, fairly good model of consistency, looking at gross profit margins in that orangish color. We can see that gross profit margins for that half year of 2025 was at 47.6% at the higher end of the range of gross profit margins over the past four comparable periods, with operating profit margins also at 26.5% and PBT margins at 26.6%, fairly healthy and certainly at the higher end of that range for comparable operating profit margin and profit before tax margins for those last comparable four periods as well. Now, trading at a price of $14.37, UCL is trading at a price to earnings ratio of 9.4 times, which is pretty much in line with the sector average, that manufacturing sector average of 10 times. Offering investors currently a trailing dividend yield of 7.7%, which is well above that sector dividend yield of 5.3%. So with that strong revenue growth in mind, again, keeping an eye on some sort of moderation over subsequent quarters as the new distribution model normalizes, improving margins and that relatively attractive dividend yield versus maintaining its market weight rating on UCL for the time being with a stable outlook. Turning very quickly to Angostura Holdings Limited, well, for that half-year period ended 2025 as well, the group would have reported an earnings per share figure of 33 cents, which was a 3.1% improvement, roughly from the 32 cents per share recorded in that prior comparable period. Driving this particular improvement in performance was an increase of 6.3% in revenues from just about 459 million to 487 million. Gross profits up also 8%, a very healthy 8% from 225 million to 243 odd million. Results from operating activities actually declined modestly by 3.2% from 85.8 to 83.1 million. Profit before taxes would have been helped to almost a 3% increase from 94 to 96.7 million on account of finance income that would have been earned over the comparable periods. So a significant jump in finance income and profits for the period, ultimately increasing that 2.1% from 66 odd million to just about 67.5 million at the half year of 2025. When we take a look at revenue trends for Angostura, generally uptrending, with one exception in that half year of 2024 where revenues actually declined 3.2%, but again, fairly significant recovery in that half year of 2025, moving with that 6.3% improvement in revenues over comparable periods. And when we take a look at AHL, so Angostura's operating margins, we can see that in terms of gross profit margin in this pink line, it is trending pretty consistently at around just under 50%, rather, at probably the midway point of its range over the past 5 comparable periods, looking at operating profit margins in that yellowish color, probably at the lower end of its operating profit margin range over the past 5 years. And similarly, with profit after tax margins, 13.8%, again at the lower end of its 5-year trailing range for profit after tax margin, meaning that the group or Angostura is slightly less efficient at converting every dollar of revenue into profits after taxes for those revenues that would be generated at this particular point in time. So at a price of $12.90 per share, AHL is trading at a price earnings ratio of 18.2 times, significantly above that sector average of 10 times, and offers investors a trailing dividend yield of just about 3%, which is below the sector average of 5.3%. On the basis of revenue improvements, those marginally lower operating results, new product offerings in the pipeline, and somewhat elevated valuations at this particular point in time, Bourse is maintaining a market weight rating on Angostura Holdings for the time being with a stable outlook. Well, that's it for this week's edition. For more information, you can give us a call at 2-BORSE or 226-8773. Email us at info@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.